Are high-risk payment processing fees, sudden account freezes, and those dreaded credit card chargebacks choking your business? If you're in a high-risk industry like peptides, debt collection, or tech support, the answer is probably a painful yes. Well, there's a secret weapon that successful high-risk companies use to slash those fees and minimize their risk, and it's called high-risk eCheck processing. I'm Charles Crillo, an onboarding specialist here at Ally Payments, and welcome to our YouTube channel. In the next 5 minutes, we're going to break down what actually makes your business high risk, show exactly why eChecks are a game changer for you, and most crucially, we're going to reveal the one major strict risk you must watch out for to keep your business running smoothly. So let's get started. First, let's define high risk, and it's usually two things. One is industry risk, things like CBD, online gambling, credit repair, or any recurring subscription service. And two is operational risk, and that means a history of high chargebacks, poor credit, or even just being a brand new business with no processing history. So if you fall into either one of those, you're a high-risk merchant. And the simple eCheck explanation is that an eCheck is just a digital version of a paper check. It's not a credit card or an ACH transaction. It moves money directly from your customer's bank account to your business bank account through the Federal Reserve. Now, this is important. Credit cards, Visa and MasterCard are powerful, sure, but they're also expensive for you, and they expose you to the full force of their strict regulations and chargeback rules, which is where most high-risk businesses get into trouble. So how do eChecks fix this problem? Now, the first massive win is lower fees. High-risk credit card fees can run as high as 5% to 10% per sale, and sometimes plus a 10% reserve. Now, with eChecks, you're typically looking at a flat rate at a much lower percentage with no reserves, and we're talking about saving thousands of dollars a month in processing costs. So here's the most crucial advantage. eChecks are immune to credit card chargebacks. Since they completely bypass the Visa and MasterCard networks, a customer can't file a credit card dispute. And this is the primary reason high-risk merchants switch or add eCheck processing as an additional payment method, in addition to the fact that any legal business can obtain eCheck processing. And finally, it's about stability. Now, traditional credit card processors are famous for suddenly shutting down high-risk accounts. Specialized eCheck processors are actually built for this risk, and they offer much higher approval rates, nearly 100%, and the stability you need to grow your business. Now, eChecks eliminate credit card and ACH chargeback risk, but they do not eliminate all unauthorized returns or chargebacks, since an account holder can still try to reverse the transaction with their bank, usually stating the product or service they ordered was not as described. And the main difference here is that there are no set chargeback thresholds for eChecks. And unlike credit cards or ACH transactions, the party that decides whether your account is open or closed is not the eCheck processor, but the merchant's bank where the eChecks are being deposited. So if a merchant's business is subject to higher chargebacks, they simply need to leave a larger balance in their bank account. For example, if your business processes $100,000 in eCheck volume monthly, it is advisable to maintain a balance of at least a week's worth of transactions, or $25,000, to easily cover any return checks. Now, for a high chargeback business, maybe bump that to 2 weeks or $50,000 of transactions as a buffer for the bank. And your bank likes returns, since they can charge you a fee for each one, but they do not want to lose money. So having a large balance protects them and keeps your account open. So 3 steps to protect your eCheck account. Step 1 is don't use a standard processor. You need a company that specializes in high-risk eCheck processing. Many companies claim to offer eCheck processing, but only a select few specialize in actual high-risk eCheck processing. Step 2 is combat the unauthorized return risk with Bulletproof authorization. Use digital forms, DocuSign, clear checkboxes, and recorded phone calls to prove that the customer authorized the transaction. Documentation is absolutely everything. Step 3 is utilize real-time verification software. Now, these specialized tools for account and fund verification, such as Plaid or Yodlee, they help verify the customer making the purchase is the actual from the account owner, and the customer has the funds available for the purchase. Furthermore, this tech verifies an account's status, active, closed, or frozen. And if you can get real-time fund confirmation before you ship or provide the service, you dramatically reduce the number of return checks you're going to receive. So to wrap up, high-risk eChecks are cheaper and offer far more stability than credit card or ACH processing, but you still need to accurately explain your product or service to customers and deliver it as you've described. Now, thank you for watching. Please hit the like and subscribe button so you don't miss out, and let me know your thoughts in the comments below. Now, if you're interested in accepting high-risk eChecks at your business or eChecks at all, please contact us at alliedpay.com. That's alliedpay.com, and we'll see you in the next video.